What in the world is happening with the Southern Utah real estate market as we approach Christmas 2022? Hey, real estate friends and fans, clients, family, stalkers. Jeremy Larkin here. It's the day after Thanksgiving, and as far as I know, I am the only single person at the office. Go figure. Max the tripod, my three-legged dog, is here watching us, having a drink of water with that big ugly bowl that we got from somewhere. Hey, buddy. We're having a good time. He's my best friend, right? We kind of do everything together. So, gang, I'm going to give you the fastest and dirtiest, fast and dirty, quick and easy report that I can on the housing market. I'm going to answer a couple of big questions that people are asking us all the time. And I hope this will be helpful because a lot of people are saying, what do I do now? Did the market crash? Is this a foreclosure market? Can I buy a foreclosure? Can I get a screaming deal? Is this a bubble? Should I do anything? Should I move to Costa Rica? You may want to move to Costa Rica just because Costa Rica is fun, but I'm going to give it to you. Ready, guys? Here we go. If you want to, let me just show you right here. Look at anything in Washington or Iron County. I've got a couple of cool websites. One is gostgeorge.com. That's GOST George.com. And what's so fun is like you can be cruising along, see a home, and you go, I think it was on Howard Lane on Four Master. I don't remember the street number. Just type in the word Howard and look at that. You'll find the listing. And by the way, that actually happens to be our listing. And that is a stunning $1.6 million home. You can do that for anywhere in the county. And you can also do that over at gocedarcity.com, which of course is Iron County, Cedar City, Parowan, Bryan Head, Duck Creek, Panguitch, all that stuff, okay? So, gang, let's answer the first question. Is this a foreclosure market? Well, let me answer this way. If you go to Southern Utah Title's website, buried on their homepage in this paragraph, is this tiny link that says, click here for the Good News Housing Report. And it gives you this really cool report that they update monthly. This is through October 2022. Right here, we're looking at something called notices of default. Jeremy, what's a notice of default? It's funny you should ask. Notice of default is the notice that you get if you don't make your mortgage payment for 90 days. Let me have a drink of my Dr. Pepper Zero. And on the 91st day, they're going to send you a letter. You're going to get a notice that says, hey, Bob or Sally, you didn't make your mortgage payment. Per the terms of your loan, in 90 days, if you don't make it, we're going to foreclose. That would be bad. Okay, well, it would look like we're seeing a lot more foreclosure activity because look how many we had in 2022, 133. Well, how many actually made it to foreclosure? Well, through October 6. So, and I'm going to answer in a moment the question as to why that is. Okay, why are people not going to foreclosure? Well, that's going to be answered scrolling way down here to this chart right here. This is a change in home prices from 2012 to 2022 nationally. You see this gigantic peak experience. Oh, it was a peak experience. The peak that I actually predicted from my bicycle in April of 2020, at the beginning of COVID, and I said I think that the housing market could actually get stronger in Washington County, not weaker because of COVID, and it did. It's fun to be right once. People have so much equity in their homes that they're not getting a trustee's deed filed on their home. They're not losing their home to foreclosure because they have enough money to either sell the home for profit because there's equity in the home, or they obviously figure out how to make their payment later. We don't really have a lot of joblessness in America right now. Okay, so Jeremy, is this a foreclosure market? Can I buy foreclosures? I answered that question to someone this week. I said, don't even waste your time. You won't find them. And if you do, you'll be competing against an incredibly large group of astute investors. We will need to see 10 times this, 5 times this minimum, but 10 times this to really have a foreclosure market. Because 5 times this would only be 30 foreclosures in 10 months in the county. Understand there are almost 60,000 residents, households. So you'd need 10 times that. You'd need 60 foreclosures year to date to even have a market to speak of. All right, that's number one. Number two, let's talk about, well, is the market slowing down? Everybody wanted the market to slow down. Well, it is. and I'm going to share this with you. So in 2021, 9,215 dwellings were built in the county. Condos, townhomes, apartments, etc. Well, through October 2022, we were down 21% over last year. So we actually have statistical proof that the market is slowing down. For everyone who wanted this market to slow down, congratulations, it's slowing down. It has slowed down. We are seeing it in the number of dwellings. Does this make sense? Okay. Number three, why did the market slow down so much, Jeremy? We knew once prices got too high, people had stopped buying. Actually, they didn't stop buying when prices got high. And the reason why is that it was so cheap to borrow money to buy a home, AKA get a mortgage, that people just kept buying. And they were doing crazy things like offering 50 and 100,000 over the asking price. Well, what slowed the market down was the combination of that and interest rates doubling. So this is January 2022. The prevailing mortgage interest rate, the cost to borrow money to buy a home, was 3.2%. It's almost free. Well, it went to 6.9. Well, it went higher. But as of 11/3, 2022, it was hovering in the high sixes. That's twice the cost. But let's talk about what that really means. Someone buying a $500,000 home, their mortgage payment probably went up $600. That's a big increase. If they bought a $700,000 or $800,000 home, their mortgage payment went up well over $1,000. So you have to appreciate what that did to housing. The combination of high prices plus high interest rates, conceptually high compared to what they were, caused the market to slow down. And that's why we're seeing fewer dwellings be built, because builders are like, crap, what are we gonna do? All right. So the question is this: is the market going to crash? Is it just going to crash? I don't think so. I think in spring of 2023, the market is going to kind of loosen up a little bit. And I think it's going to loosen up because there's this period of denial or hope, maybe it's hope, that people have, like, I hope home values drop by 40% and I can get buy a foreclosure and interest rates will go back to 3%. Couple things, they're not probably ever going to go back to 3%, my opinion. Number two, we're not going to see a large foreclosure market. And number three, people still want to live in Washington and Iron County. And you know why. It's awesome here, right? So Thanksgiving Day, I was out riding my mountain bike with my buddies in the morning. You can't do that everywhere in the world. And by the way, I could have gone and skied for the afternoon at Bryan Head. We could have skied in the morning, ridden in the afternoon, ridden in the morning the way we did, skied in the afternoon. Matter of fact, I could have skied and played golf and ridden my bike in the same day if I crammed it all in fast enough, right? So I think the market will loosen up, and I think people will come to kind of an acceptance of where things are. So what do you need to do? What do you do now? Well, if you're thinking about buying or selling in 2023, call us now. And what I would do is let's just discuss what you want to do and craft a strategy. And we may say, because you're going to ask for our opinion, we may walk you through the details and determine with you that it's not the time. Or you may say it is the time. For instance, maybe you should buy. I bought a home 2 months ago on Main Street in St. George. Yeah, home prices have been going down. Interest rates are high, and I bought a home. And there was a rationale for it. So you can always refinance your loan later when rates go down, and they will go down. We just don't know when and how much. So I'm not telling you to buy, I'm not telling you to sell, but people are going to continue to buy and sell real estate. We work with them every day. So if you have questions, visit us at gostgeorge.com, gocedarcity.com. Let's strategize here in December so you can do something in January or February. Or maybe let's strategize now and help you figure out you don't want to do something for 2 or 3 or 5 years. All right, Jeremy Larkin with the Larkin Group, KW Realty, giving you the prayer emoji, thanking you, sending you incredible energy this holiday season. Over and out.